welcome to this brand new edition of Behind the Scenes, a show where we share a sneak peek of the latest Business Today magazine with all our viewers. I'm Sakshi Batra, and with me on the show I have Mr. Saurabh Majumdar, editor of the Business Today magazine. We also have with us Mr. Anand Adhikari, managing editor, Krishna Gopalan, executive editor of Business Today magazine, and from the research desk we have Rahul Oberoi, assistant editor of Business Today magazine. Welcome, gentlemen. It's great to have you all on this show, and this is a special edition of BT 500 that focuses on India's most valuable companies. So, Saurabh, let me kickstart this discussion with you. Help our viewers really understand, Saurabh, what is the significance of bringing this issue at this point in time? At this very interesting time when we are seeing domestic markets in India, we're looking at these all-time high levels on the Sensex and the Nifty. And on the other hand, we're entering a new year very shortly where there is a lot of caution that people are talking about. There is recession fear. There is the economic slowdown that we are looking at. Most of the global agencies are downgrading their GDP forecasts as well. At this point in time, what is the significance of talking about the most valuable companies here?
Well, Sakshi, that's an interesting aspect you bring. But the BT 500 has been around since 1992. It's weathered many storms, ups and downs in the market, and various other economic events. This is the most watched, most awaited annual compendium of India's most valuable companies by average market capitalization. And Rahul, of course, will explain the details of the methodology in due course. But it is a very important listing because here are what we call the champions of the bourses, because this is how the market looks at these companies. And as you can see in the listing, these are the top guys in the business. All the big boys are right up there at the top across sectors. BFSI, manufacturing, infrastructure, the entire pack. So it's a very significant ranking. And the point also is the fact that, as market sees it at this time, these are important, pointers where with these, the market has valued these companies in a certain way. And we'll have to keep watching them as how they play out in the kind of headwinds which you just mentioned. And I think that is very significant because the timing is significant in that context. Because yes, there are headwinds, global inflation, rising interest rates, the entire geopolitical crisis continuing, and all of that. So how these big companies, the companies are, navigating this space, and therefore how are they valued by the markets is going to be very interesting to watch.
Absolutely. So what has been revealed? Could you give us those details and share with us, and with all our viewers, what have you found out in this ranking, the top most valued companies? If you could give us some names there.
Well, the top names are pretty much the same as last year. You have Reliance there right at the top. You have, the TCSs, the HDFC banks right up there. But, and Reliance, of course, at 17 lakh crore average market capitalization. We, of course, have, the period under consideration is October 2021 October 2021 to September 30, 2022. And in that period, the average market capitalization is considered for the listing. Now, in that, of course, Reliance at 17 lakh crore is still number one. But the story this year is also that of the Adani pack, which, of course, Anand here will explain in more detail. He's done a fantastic story on that, and Reliance has been covered by Krishna. But these are the key takeaway this year has been the rise of the Adani pack in the markets, and that continues. That story continues and expands in a way with newer sectors coming under the Adani fold. 124% growth in the average market cap of the Adani pack. So that's one key story. Then, of course, there is Reliance. Then there is Avenue Supermarts, which Krishna will also talk about, which is Radhakishan Damani's company. There are very, very interesting takeaways from there. There is also last year, you may remember, and that continues, the new listings from the startup space, which of course met with, unfortunately, did not meet with great success at the market, in the public markets, and that's a lesson many startups are learning the hard way. So there are lots of key takeaways from this list this year as well.
All right. Thank you for sharing that context with all our viewers to start off with. Let me now take it across to Rahul to really understand the methodology. Help us understand, Rahul, what methodology did you use to really come up with this ranking and how the ranking of the top 10 players looks like in the latest BT 500 list?
Sure. So, Sakshi, we started the universe with more than 4,000 companies. And after that, we cut out those companies which traded less than 20% of the trading days during our study period, which was October 1, 2021 to September 30, 2022. Thereafter, we left with a big, huge number of companies, and we arranged that companies on the basis of average market capitalization, and we put that companies in a descending order
Right.
and gave rankings to 1 to 1,000. And we divide that data in two parts. First 100 is a part of BT 500, and the next 500 is a part of the next 500.
Okay. Okay,
Yeah.
understood that. So we've come to know about some of the top gainers that sort of just shared with us. Could you share with us some other names, maybe the top gainers and the losers?
Sure. If we talk about top gainers, those which are part of BT 500 last year and are also part of BT 500 this year. So some of the names are Tata Teleservices Maharashtra, BSC, CG Power, IRB Infra, and Trident. Rankings of these companies jumped by more than 100 spots
Right.
this year.
Okay. Understood that. Well, let me go across to Anand now. Anand, it's very interesting to note that, while we're talking about these top three companies like Reliance Industries, TCS, and HDFC Bank as the top ranking ones in BT 500, but you've actually done a cover story on the Adani Group. We got to know some of the key insights that Saurav also shared, but you share with us what are the key reasons of doing the Adani cover story?
So, Sakshi, Gautam Adani is the man, to watch out for, not just in India, or
Hmm.
even globally, as he's emerged as a third, richest person. If you look at the current market cap, like Sora talked about, the average market cap of, Reliance around, 17 lakh crore. Now, seven Adani companies, their market cap today is around 19 lakh crore. They are today bigger, than Reliance. But the battle for market cap will continue because even Reliance has, retail and telecom and other businesses. I'm sure, Krishna will, talk about them. Now there are two or three major reasons for doing the Adani story. Now one is Adani, is amongst the very few entrepreneurs who is currently investing. The kind of investment they have planned is like US dollar 150 billion in the next 5 to 10 years. This is around 12 lakh crore. Now let me
Sure.
put this in perspective. The central government this year 20 to 23 is raising around 12 to 13 lakh crore. You know if you look at our this capex, central government's capex is around 7.55 lakh crore. So Adanis are going to invest 12 lakh crore in next 5 to 10 years. So you can imagine the kind of investment they are making. Second is the new sector. Adani group is in a way is synced with the government's agenda. Look at the green hydrogen. They are planning to set up the entire value chain. Right from manufacturing solar cell to electrolysis to production of green hydrogen to downstream product. Like ammonia and all. Second, if you look at airport, I mean they already have 8 airports. I mean they are the largest
Yes.
airport operator in India, including the Mumbai airport.
Yes.
They are into roads and highways. They already have some 14 road projects, which includes around 5,000 kilometers of total lane. They are
Yeah.
into data center. Again, it's a future business. I mean, they are setting up some 1 gigawatt of capacity. Chennai one they have already
Yes.
commissioned. Next is coming in Noida, and they have, I think, 7, 8 more coming up. And finally, defense and aviation. I mean, they recently bought one MRO company, Airworks, which is the India's largest and the oldest MRO. And in a way, all these things reflects in their market price also today. If you see the
Right.
kind of fees they are getting, and that reflects in the market. I mean, that's why they are there in the top.
Absolutely. Absolutely. But there's one concern. Market commentators are often talking about this Adani Group substantial leverage that it has on the books. Is there a risk from this high debt that could perhaps, derail the kind of rally that we've seen?
So if you look at the assets, see, the debt should be seen in the light of the assets. So today the net debt is around 1.6 lakh crore. But
Hmm.
if you see the net leverage, I think that is around 3.2%. Okay, globally,
Okay.
if you look at when I spoke to their CFO, he was saying the global leverage in infrastructure kind of companies,
Yeah.
the ports, roads, airports, and the green and all is 2.7 to 4%. It ranges between, and they're saying they're at 3.2, and
Mm.
they want to go down further in the next 3 to 5 year.
Sure.
And second, even if you see the mix which you have written in the story, the financing mix is more towards bonds. So today, 36% of their finance debt, if you see,
Yeah.
is bond financed. Okay, and they have long term bonds and they have long term assets. So if you see the asset and liabilities, unlike you see the earlier player which got bankrupt,
Yeah.
the power or the
Yeah.
infra player, because they borrowed from banks. Okay, so in case of
Yes.
Adani, 38% is bonds, and these are long term bonds. Okay, bank financing, is around 25% from PSU, another for 7-8% from private sector. So it's less than that which they have borrowed in the bond market. Second, if you look at the in the pledging part, a lot of people say tomorrow if the
Yeah.
what will happen tomorrow if the share price of Adani companies fall. There is very low pledging. I think it's less than
Yeah.
12% in Adani companies, and you must have seen last week. Now they plan to raise some 20,000 crore. The Adani Enterprises, which is the holding company, now they are raising this money via equity route. They're expanding the equity, and that will result
Sure.
in some 4% dilution. So they are not borrowing
Sure.
from bank. 20,000 crores
Mm.
will come from the market. People, maybe
Sure.
institutional investors, they will come. So they have big plans, and
That's
I
amazing.
think that should be seen in the light of the assets which they are creating, and these are hard assets. Road, airport, MRO, data center. These are hard assets.
Okay, well, thanks so much, Anand, for sharing those insights with us. Let me take it across to Krishna now. From Adani to Ambani, that's what I want to go to. Krishna, help us understand how has Reliance Industries really managed to transform itself into an entity with successful consumer-facing businesses now?
So actually, I think the question is best answered by going back in the past, more specifically to 2014, when the revenue from the consumer business was almost a zero. They had a fledgling retail business, and that was it. 2 years later, they announced Geo, and then the retail business took off at the same time. So today, actually, if you look at the revenues for the group, it's actually evenly split between the traditional and the new businesses, which is quite remarkable because retail on its own, for example, had revenue of 2 lakh crores for FY22. So the moment so there's an interesting scenario where retail and telecom took off at the same time. It's not something that one sees very often in the history of corporate India. But because of this, you've basically had an entity that's a lot more robust, a lot more profit focused. And what people don't realize is that the new businesses, because of the incremental value they bring to the table, are very high on margins. So that to really cut a long story short, that's really the story of Reliance's transformation.
Yes, absolutely. But there's another very interesting company as well, and that's what I'm going to talk about. Saurabh gave us some hints in the initial comments as well. Avenue Supermarts. We know it has been investors' darling for so many years now, from the time it got listed as well. How has Avenue Supermarts really managed to stay relevant in a dynamic environment, and what can it really do to stay relevant even going forward from here?
So actually, the biggest problem in this business is we work on wafer thin margins, and if you look at it, EBITDA or even at a PAT level, it would be more than 3%. They've taken the Walmart model where they basically buy out the real estate completely, so the cost of rentals gets saved, and that 3%, which is the thumb rule in rentals as a proportion of total sales, that goes straight to the EBITDA. So which means from 3 jumps to 6. The moment you own the land, then you have the liberty of creating your own warehouses. So which means the supply chain also comes in control. Thanks to what I would call the effective supply chain married with a tremendously effective cost structure, they managed to get the entire equation right. But most importantly, grocery being the largest part of India's consumption story, uh, that still remains a fairly underpenetrated market in an organized form. And that's where the market really opened up for them. They have a chain of about 300 stores today. No store is ever less than 30 to 35,000 square feet, and they cut across the length and breadth of India. If you look at the
Yeah.
whole geographical shift, for example, they are pretty much in line with the consumption pattern in India. So you'll have a tilt of stores, for example, in 4 key states. So they got it right in terms of buying the land. Instantly they also have what is called a cluster approach. So they will enter a particular area, have 3 to 4 stores within that densely populated area, create a serious entry barrier for competition, and get the most out of the consumer's wallet.
Yeah. Okay, understood that, and that'll be very interesting to even watch going forward from here. But what's also very interesting take in this issue is that the traditional companies have really bounced back very sharply and impressively. How much has an increased outlay on infrastructure and perhaps smart expansion really helped them really, come back?
Huge, Sakshi. If you just speak of infrastructure, straight away the company that gains tremendously is Larsen& Toubro. It's incredible what they've done in terms of getting larger EPC contracts or just getting a chunk of any incremental spend that the government puts on infrastructure. You spoke of acquisitions. That again is a superb example when you look at companies like Hindalco, Vedanta. They didn't make this big ticket buyouts. They made very strategic moves. For example, Hindalco's story in the last 4 years is really how the Alaris buyout paid off for them. Vedanta, for
Yes.
example, were very smart in terms of buying on some of the nickel and the cobalt mines in the state of Goa. So they picked up assets which are very strategic, didn't spend a whole lot of money, ensure the debt was completely in control, and ensure the balance sheet and the P&L was completely looking good in that sense. Likewise, look at the case of Coal India. The government managed to kind of combine the auctions completely, and what you have now is a process that's far less complicated and more transparent. So all said and done, you really have the traditional companies. Well, in an ironic way, they look a lot cooler today.
Absolutely. They look a lot cooler, and the ones which were cool are actually looking quite scary at this point in time. So, Saurav, let me come back to you for a wrap up. We've heard all the different stories that one will definitely look for more insights in this issue. Any particular favorites of yours in terms of coverage in this issue?
No, I think it's not fair on my part to pick favorites here, Sakshi. But I definitely enjoyed all the big stories which we've done. Particularly Anand's story on Adani was a really deep dive into a very complex group. I must say it's a large group with a huge footprint. Similarly, I really enjoyed Krishna's story on Avenue Supermarts because we talk about Radhakishan, Damani, and how Avenue is a market darling, but we really wanted to go into the depths of why it has happened that way.
Yeah.
What is the
Yeah.
secret sauce? I might want to add here a little bit of interesting figure here.
Okay.
When we started off, when BT started this BT 500 listing in 1992, the total average the market cap at that point was 1.01 lakh crore. Today, that
Okay.
average market cap total figure stands at 251 lakh crore. So you can
Correct.
imagine what kind of journey the markets have taken also, Sakshi, in the process of these last 30 years.
Absolutely. Well, absolutely. Thank you so much, Saurav, for being with us on this show. Anand, Krishna, Rahul, all of you as well, for sharing all the insights on the stories that you've contributed in BT 500 issue. I'm sure this is going to be a very, very insightful read for all our viewers as well. So I urge all of you to please go out and grab your copies. I have mine, so please go ahead and grab your copies right now. Thank you so much. It's been a pleasure speaking to all of you as is always. Thank you very much.